Welcome to the StockMentor.com studios. Here in the Black Hills of South Dakota, I'm your stock mentor, Brian Johnson, making professional trading simple. And finally, we see actual red across the board in the markets after today's close. Little opportunity to make some money on the indices. For my subscribers watching this video today, you got an intraday email from me earlier today giving you the levels to watch at the close, and you can see that we did make those levels. The market was able to close above those levels. So still nothing broken in the bigger picture. And you guys can see that here the Dow, after falling most of the day, came right back into a very strong level of support. That's this 50-period moving average here on the 60-minute chart. Bounced off of it after trying to poke its head below it ever so slightly and moved back up by the end of the day, closing back up and above that 10,600 level. So a break of the 10,600 I said be watching for. I said more importantly, watch for a close below 10,600. Did not see it today. Saw a break below it, but not a close below it. You might have been able to duck in on a couple of dollars here on the Dow below the 10,600. But it didn't stay there very long, moving back up and above, as I said, the 10,600 level. You can see it on the daily here, holding above this upper level of support. I don't have it drawn in. It's just sitting above the 10,600 level, as we talked about. Still, the larger level is this 10,500. Looked for a little while during the day that this might end up being a pretty bearish day. You can see, obviously, that things pulled themselves back up by the end of the day. So what do we see? Well, we've only got one day to look at, but with the information given to me, it just appears like another high base is forming here on the Dow. Still need a break below 10,600, really below maybe the 10,550 area to start looking for a more serious short in the Dow, and definitely below the 10,500 is the bigger level of support. We have the 20-period moving average down here at 10,510, and of course 10,500 being the larger level of support to break, along with the lower channel line. So all kinds of support awaits the bears to break through below this. So be watching for this. Though a break below 10,500 certainly would be a very defensible place to get short if you haven't taken any short opportunities yet. On the Nasdaq, this was the one that was just able to get its head back above water. Funny to see this, but you can see it fall once again today. Not the strongest yesterday. Once again, not strong at all again today. And actually, the biggest mover to the downside today. The Nasdaq being down 30 points, that's about 1.3%, which was the largest mover and the most weak. But you can see that once it broke 1870, that was my first call, followed by 1860. We saw that today, only to see it find support right back here near this gap fill, and a move back up to get just above that 1860 level. See how it ducked below it? But the close is a little bit more important in my book, and we did not see that close below the 1860. If we do look at the daily, though, you can see it having broke this trend line once again and finding very, very powerful support here at the 20-day moving average on the Nasdaq. You can see that the 20-day is at 1852.20. The low was 1852.31. So I hope you guys are continuing to watch these levels in your trading. Very important that you're aware of these different levels of support, especially once we get out to the larger time frames. So the Nasdaq below this trend line, yet finding support right at a perfect and very logical support area here. For those of you that traded it down today, this obviously was a logical place to take profits or to move stops. And this would have given you almost the entire move, which would have been about maybe 20 points. Might have been able to pull 15 to 20 points out of the Nasdaq if you're playing that particular ETF. Nasdaq on a weekly, it's only Tuesday, so this candle can look like who knows what by the end of the week. We won't worry about it on a Tuesday. SPX on a 60. Now it moved back down, hit this. I talked about the 1130 mark. We didn't quite make it, but close enough. 1131.77, point and a half, almost 2 points. Didn't quite make the 1130 mark, but certainly came back to retest this area. I'll show you on the next chart why this is a logical place to find support here. Now we're bouncing back up, coming up underneath and towards and past the 1135 area, but more importantly towards the 50 period moving average on the 60 minute. That will be its next hurdle now to get back up and over for the bulls. However, from a daily, I mentioned logical place of support. Hope you guys have these places marked in your charts because it found this overhead channel line as support. 1130-ish area along with this overhead channel made for good support on the way back down, hitting that 1132 mark and bouncing back up by the end of the day. So for those of you that caught this short today, or may have been short from even yesterday at the 1150 area, which we talked about as being heavy resistance, you saw a little gainer today. You might have moved your stops down. You might not be out of it yet. Once again, just be cautious playing things overnight during options expiration week. But a very logical place to take a short up here towards 1150. Now, a very logical place to have taken profits down here at 1130, whatever, 2.5, wherever you might have gotten out. That'd have given you, 10, 15 points on that particular move. And not a bad move. For my subscribers, you also got a picture of my futures chart. I like to play the futures. I like to watch the futures, so you saw my ES. And you also saw where the logical place of resistance was, or support was, and exactly what we saw for a bounce. You'll see that the place that we bounced today on the futures was basically one tick away from my level of support. So I hope you guys were watching that as well and had that marked in your charts. Good place for you futures traders to have taken profits. Moving on to the weekly, you can see once again it's Tuesday. I'm not going to worry too much about a weekly chart on Tuesday, so we'll move on to the VIX. Moving up again today, not the entire day though. You saw a big move up here for a while, only to have it pull back. Now, had you been looking for those support levels I mentioned, you may have been able to call pretty much the high in the VIX, and if you are an options trader, you would have been able to basically get out at the top of the volatility, which would have given you close to maximum profits on your options trades. If we take a look at this from a weekly standpoint, you can see where we gapped down to start the week, and now after 2 days, we're right back up to this level of support resistance. On the VIX, trying to poke above it today, wasn't able to do it. But as I mentioned, when it gets down here, I love to buy options because they start to get a lot less expensive. You play this to the upside, and you'll notice that it's that your options, as long as you've got the price right, as well, you'll see that the options increase in value faster than what they normally do. So I hope you guys were able to catch some of that volatility from the option side of things.